Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
Welcome back. I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour on AM 560, The Answer.
The Answer. Well, that was like PBS.
That's right.
That's right. Hi.
They say, talk softly.
How is that?
And talk right into the microphone, Jim, because that's the way you're supposed to do PBS.
Cool.
What segment are we on now, Jim?
We're on Dr. Fader's segment. It's Dr. Richard Fader from Fort Wayne, Indiana. And he writes this week, Steve, he has a very good question, I believe. He says, can the IRS go after me personally if my company falls behind on payroll taxes?
Now, I get this question a lot because many of my clients are business owners, either generally corporations, but sometimes they're sole proprietors. And then they often are having, if they're not paying the IRS, they're having some financial issues.
Yes.
And so sometimes their company is also having financial issues, and that's what gets them to have their own financial issues.
That's horrible.
I know, it is horrible. And so when they come to see me, sometimes they owe the IRS personally. And so one of my questions are always, well, have you been paying your payroll tax? We're a little bit behind on the payroll tax. And that inevitably causes multiple problems, okay? Because what happens is the IRS starts going after the business because there's payroll tax issues. And these are quarterly, right? So every quarter I'm supposed to file my 941 tax returns and file the returns and pay the tax. If I don't pay the tax, they start piling up. Every quarter I get penalties, and the penalties are fairly severe, right?
Because they don't want you to do that.
They don't want you to do that. And they don't want you borrowing money from the IRS to pay your bills and stay open. They want their money. So remember, what happens with the 941 taxes is I deduct a certain portion from my employees' pay stubs or payroll. All right, they have to pay the federal taxes and Medicare and Social Security. So I deduct that from their check, and then I put it into an account, and I'm supposed to send it to the IRS. So these are called trust fund taxes, because they're not the company's money. This is somebody else's money that you're holding. And so there's special rules for trust fund taxes. And one of those rules, it's called the trust fund recovery penalty. And what this is a penalty.
That doesn't sound good.
No, well, the penalty is that they go after an owner or other responsible party. So I could just be a accountant or a payroll tax or a bookkeeper for a company. And if I'm writing checks to my employees and I know the company is not sending in the money to the IRS, even though I don't own the company, I could be held responsible and then come after me for those taxes. So you have to be very careful about this.
That doesn't seem right.
Well, because you're participating in them not paying those taxes over to the IRS. And so that's what the IRS call it. Again, they call it a responsible party. So if you're deemed a responsible party, well, then the IRS will assess this trust fund recovery penalty against you personally. So now they're trying to collect it from the company, and then they're going to turn around and try to collect the same amount of money from you. Actually, it's not the same amount of money because, as I mentioned, there's three different sections when it comes to 941 taxes. You have the employees portion, and then you have the employer's portion. And then the third section is now escaping me. But the only part that's called the trust fund recovery is that employees portion that they paid in. Okay, so that's the part that they can come after me, called the trust fund recovery.
Let's say you're in between quarters and you're going to. Do they charge you? Do you have to do it weekly? Or when do you deposit the money?
Sometimes you do have to do it weekly, but generally you're supposed to deposit the money quarterly. Again, there are companies that have to pay weekly. If you have a big payroll, they want you to pay weekly.
And do they charge you interest on that money?
Do they charge you interest?
So if you're only paying quarterly,
if you missed your payment.
So really, that's what that is like a beefer's tax. To make you beef on the owner if that's hey, look, they're going to take that money from me.
I think that's I think you're right about that, because if they can come after me, I'm not going to let you. I don't want anything to do with that. You got to pay the taxes.
You're stepping out on the business at night,
right.
having living the life of Riley.
So then you have your own. So now you have your own problem. Now this same thing with when you're talking about Illinois, state of Illinois sales tax. Right, that's not your money as a business.
Well, Illinois thinks every dollar belongs to them, and then you're lucky to get
any.
They
do treat it that way too. They actually do. And another bad thing about this is that I just mentioned sales tax and this trust fund recovery penalty. They're not dischargeable in bankruptcy.
Oh, God.
So if you're having financial problems and your business takes a dive and you have to file bankruptcy, you can't get rid of that tax fund recovery penalty.
You can't. That was going to be my next question.
Well, you don't. You can't get rid of it in a bankruptcy. So you're stuck with it. Now there's ways to resolve it, and that's what we help a lot of people do. We help people resolve it. So a lot of people will come to me
without jumping.
That's right, jumping off a building. A lot of people will come to me about their business taxes, and then I'll have to alert them that, well, now you're also probably going to have some personal tax issues with this trust fund recovery, and so it turns into two cases because it's a different issue. They come after you personally. So if you're having any of these issues, if you own a company and you're having problems with the payroll tax,
or if you're the payroll tax guy, could he call you?
That's right. You should call him because he might be responsible for this too.
Yeah.
So you should call me, and you should give me a call at 312-664-6649. It's OPM Tax Resolution.
It's not beefing if you
and the law
liable.
office of Stephen A. Leahy. You can visit us on the web at chicagotaxteam.com.
Like us on Facebook or follow us on Twitter.
Oh, he got it right that time. He's been practicing.
Yeah.
So meet us on the other side.